Welcome back to Dad's Gone Crypto, the show where two crypto-curious dads make sense of the wild world of blockchain. I'm Sean here with crypto partner in crime, Ryan. Today, we've got an absolutely epic episode for you. We're tackling some of the biggest headaches in crypto, the complexities that scare off newcomers, the lack of trust, if you've been listening to the news, in exchanges, UFTX, and some of the struggles of plugging blockchains into real businesses. But fear not, because our guest today claims he has solutions for all of that.
Ever wonder how blockchain solves real-world problems beyond just funny internet coins? Or dream of an exchange where you actually hold your crypto keys so you don't have to trust a third party? Today, we're diving into exactly that. We have Tom Anderson, the founder and CEO of Devvio, the company behind DevvE and DevvX. Tom's a tech wizard. He literally built the world's first consumer 3D touch device back in the day, and now he's turned his sights on crypto. He's here to tell us how DevvE is making crypto faster, safer, greener, and easier for regular folks and big businesses alike.
DevvE is launching the first true non-custodial exchange that runs on a blockchain called DevvX. Reportedly handles 8 million transactions per second. Yeah, you heard right, 8 million. On top of that, they're tokenizing everything from real estate to carbon credits, even powering a fantasy game that sold $2 million in NFTs in just 2 weeks. If that doesn't grab your attention, I don't know what will.
As dads, we love things that are fast, secure, and built to last, whether it's a family car or a blockchain. And we also love a good story. So stick around for some dad-level analogies, a bit of banter, and a whole lot of insight. By the end of this episode, you'll understand terms like non-custodial crypto exchanges, tokenized real estate and carbon credits, and ESG investing with blockchain, all without breaking a sweat.
Let's jump right in. Tom Anderson, welcome back to Dad's Gone Crypto. And it's been a while. We're thrilled to have you back on the show.
Yeah, it's awesome being back. It's been neat seeing your guys' growth too. So awesome. Thanks for having me again.
Thank you.
Thanks, Tom. Great to have you back.
All right, so let's dive into the first question. Tom, for our listeners who are new to this, give us a high-level scoop. What is DevvE and what are the big problems you guys have been solving in the crypto space?
Yeah, so the main focus we have right now is on building a crypto exchange, a digital asset exchange. So let me take one step back and kind of set the stage a bit.
Mm-hmm.
I think there's a movement in the blockchain world that a lot of people in the blockchain and crypto space don't even know about yet. And that movement is tokenization. And so all of the world's big financial entities are moving ahead full speed, with BlackRock leading the world's biggest asset manager, on down to the Goldman Sachs's, on down to even now, large to middle-sized banks. Like everybody in the traditional finance world is really looking at tokenization. And tokenization is, 50 times more money, more assets that are going to be coming into the blockchain space than are currently in there. So there's this sea change of movement in the blockchain space that a lot of, again, the blockchain kind of crypto crowd doesn't even know about. And so the crypto space and the blockchain space is going to be dramatically different in a couple of years than where it is now. 50 times more money coming into it, tens of trillions of dollars. And so really the way I would position us and where we've been building the perfect technology for that kind of movement for the past 10 years. We've been building enterprise scale and TradFi kind of savvy and acceptable approaches to blockchain. And one of the biggest things that we're working on right now is building a digital asset exchange where anybody can trade assets. It's the first non-custodial exchange, meaning you control your assets the whole time. One of the big kind of phrases in crypto is "not your keys, not your crypto." Right? If you trade on Coinbase or Binance, you have to put your assets into those exchanges. They own them. They custody them. They create a lot of risk. FTX showed that there was a hack of $1.5 billion of ETH a couple weeks ago with Bybit. And they're lucky that didn't put them out of business. And then everybody would have lost their funds if they had really gone into bankruptcy and everything. So we removed that problem. We let people trade assets, work on our exchange called DevvXchange. where you maintain custody the whole time. You could even trade directly from a hardware wallet, for example. So it's the future of how all assets are going to be exchanged, including all these assets that are moving in this big global tokenization movement.
Right. Wow. That's absolutely
Exciting.
amazing.
All right, Tom, security is a major concern, especially after the FTX collapse and obviously the Bybit. How does DevvE Exchange tackle security different?
So we have a number of solutions that are completely different from everything else out there. And I'll give a little bit of an example. Like the first time I was kind of getting into crypto back in 2015. So if you go back, I kind of followed Bitcoin from an intellectual level around 2011, but really started delving into the space, read the Bitcoin white paper, got my arms around how it worked and everything, kind of 2015-ish, and started designing, my own layer one blockchain protocol. And one of the craziest things in the space when you're kind of coming into it new, and there's a lot of other people coming into it new, recently as well, but you see these like massive hacks and this just like kind of crazy way of doing business. Like I mentioned, the Bybit hack, $1.5 billion are stolen, and everybody goes, "Yeah, that's crypto. You know what happens, right?" I love also the philosophy you guys have, dads, gone crypto. I'm a dad too, right? So just going into crypto as just kind of a regular person again, those kinds of things just really stick out. It's like um, having a situation where you lose all of your assets. Like there's the famous
Yeah.
one where the fellow lost his hard drive in a dump, right? And then he tried suing
Landmine,
the
yeah.
dump to get it and everything.
Right.
You lose all of your money because you lose your private key. It's crazy. Like, could you imagine you opened up your bank account in real world life, and all of your assets are gone, and it's like, oh,
Right.
sorry, it happens, right? And then the craziness across theft, all the hacks and spams, even just sending crypto, like it's nerve wracking, right? Like you send
Yeah.
something, it's
Right.
like, well, let me send a test transaction. Well, I got to pay the fees twice, but it's worth it, right? I'll send the test transaction, make sure it goes through. It went through, and a half hour later, it went through. Yeah, it went through. All right, I'll send the rest. So the ways that those of us in the crypto space now over the past few years are used to working just don't work for kind of the traditional world, for the majority of consumers out there. And so if you go back, 8, 9 years, I looked at that craziness and said, like, we're designing something that's going to be for the future. And people, again, even back then, knew wouldn't accept it, right? So we designed. Well, I'll start in the exchange. You control your assets the whole time, so that's huge. Like that Bybit hack wouldn't happen on our exchange because there's no omnibus wallet. There's no like central wallet that holds everybody's assets. That's one gigantic target. And so the idea that you control your assets the whole time creates a huge amount of security and safety. And regulators love it because you remove the risks of like FTX, which went out of business
Yeah.
because they stole everybody's assets. Another of the big ones is private key loss, like we just mentioned. The hard drive in the dump, right?
Yeah.
We have a system outside of the private key management itself, that there's recourse if you lose your private key, and there's no trust. It's really kind of a clever logic system. Like if you didn't lose your private key, you can't use the recovery system, but if you did lose your private key, then you can. So it's recourse for loss, but no trust in it. And then we have theft protections. I mean, theft is such a big thing, in the crypto space. There's so many hackers, so many scammers out there, and like
Yeah.
you on the Telegram channels, you hear where people say like, oh, I just lost my funds, and then everybody chimes in, oh, that happened to me. Like everybody runs into that in the crypto space. And so we've designed from the ground up solutions to all these problems that in the traditional kind of regular world you don't deal with, and people won't accept them in the blockchain space in the future. So that's the biggest difference between us and everything else out there, is we've designed from the beginning the types of things that we rely on in our traditional finance world.
Yeah.
Wow, that's amazing. And you do all that really, really fast.
Yeah,
So
yeah, millions of
you
transactions
talked
per
about it.
second. Yeah.
Yeah, 8 million transactions. So how does DevvE achieve that kind of throughput, and why is it so important? Why do we really need millions of transactions per second, or is it more about bragging rights?
And maybe just a layer on that, like what does 8 million mean? I think to give it context in relation to what?
Yeah. So it sounds like a big number that you would never use, for example. So for example, Visa, processes 40,000 transactions per second, right? So why would you ever need millions?
Right.
But when you start looking at exchange volumes and the ways that exchanges from TradFi exchanges to crypto exchanges like
Yeah.
Binance, they actually do start pushing transactions kind of that level and that order of magnitude. So the main thing, well, so if you go back, again, 8, 9 years, the main invention that started Devvio off and then the DevvE cryptocurrency, the main thing that started everything off was our sharding solution, our invention of how
Mm.
we parallelize how blockchains work. And so we have this system where you have an independent blockchain, and if you reach kind of the throughput, limits on that, then you just add another one. And if you reach the throughput limits on that, yeah, another one, and you just keep adding them as long as you need, as much as you need to get the scalability you need. And the invention that we had 8 years ago was a way for those to talk to each other. So cross shard
Mm.
mechanisms. So ways that a
Hmm.
transaction can go from one of those blockchain shards to another blockchain shard. And so that's the foundation we built the whole company on. And so it lets you scale as much as you ever need, lets you be very cost effective. We're 1/10 millionth the cost of Ethereum, for example, or 1/3 billionth the energy usage of Bitcoin. So it's a very just efficient system. But maybe the most important thing is the architectural flexibility. And so any kind of problem we want to solve in blockchain, we can spin up shards, spin up our own kind of independent blockchains to solve those problems. So then that leads kind of into where we are now. And I would say 2 years ago we came up with another invention, and I would what that's called contingent transaction sets. So the idea is that you sign a transaction, with an ECDSA signature. So again, not getting too technical, but it's the same signature that Bitcoin uses, but you
Okay.
sign it with a contingency. So I'm willing to give somebody a Bitcoin if I get $100,000 in return. And then somebody else signs a contingent transaction that says, I'm willing to give $100,000 if I get a Bitcoin in return. And then
Mm.
our platform puts those two together, puts them into a set, a contingent transaction set, and then they go through at the exact same moment. So it's instantaneous settlement, and there's no middleman. You never have a transaction that goes to somebody else. All of the rest of the world's exchanges, including the crypto exchanges, work through middlemen, right? And so
Yeah.
so there's risk that people are going to steal, like what happened with FTX. And in the traditional finance world, there's huge industries built around that as well. That adds a lot of cost and time. Stocks settle a day later, that kind of thing. And so we
Yeah.
solve all of those problems with that contingent transaction set invention. So, kind of where you said, we originally started, had that invention where we have high speed, low cost, high throughput, leading now to where we have, this particular invention that lets us implement exchanges in a really clever, powerful way.
That's amazing.
All right. So sharding, can you tell us a little bit about, what makes your type of, so sharding is obviously taking the blockchain, breaking it down to small fragments, spinning it up for a particular need, and then as your needs grow, so you can spin up more, and your technology speaks to the different shards. So, but do you have some specific technology that you've patented around that makes it very unique? And can businesses incorporate it into their daily, ecosystem, like for instance, farming or medical?
Yeah. Yeah, I think one of the most compelling aspects of the sharding solution is that it lets you spin up blockchains that work for a particular application. So again, going to the very beginning, of the talk today, where I described this global tokenization movement, and all of the world's big financial entities are moving forward, in this tokenization philosophy. Larry Fink said all stocks and bonds are going to be tokenized. One of our board members has sat in on high level C suite executive meetings with some of these really big global 100 financial companies, and they've said their main focus right now is tokenization, right? So it's a big concept coming. It almost kind of reminds me of in the mid 2000s when companies were moving to cloud computing. It was this big movement that all these big companies started moving ahead towards before the rest of the world kind of saw these changes. And so tokenization is kind of where that is now. So to answer your question, then what does our sharding solution do in that context? We can spin up shards for each business partner. So if they want to tokenize real estate, or they want to tokenize stocks and bonds, or they want to tokenize ESG carbon credits or whatever, we can spin up a system particularly suited to them. And our system works through a RESTful API. So that means it just works with the way that all web programmers regularly work. So any of these big companies, they already have programmers that can easily integrate into our system. And so with that, we can onboard many new types of assets. And all those assets then go on to the exchange. And then the exchange lets you then control your assets, trade them instantly, do it very inexpensively, and have these theft and loss protections that nobody else has. It's by far the safest place to keep your crypto.
Sure.
Okay. So I've seen you advertise DevvX as a blockchain built for enterprise. So enterprises care, about things like privacy, reliability, compliance, integration with their existing systems. And I know you talked about that up briefly there, but what features does DevvX have that traditional blockchains lack? And what makes it enterprise friendly?
Yeah, so I'll give you an example that we just announced even last week at Paris Blockchain Week. We announced a partnership with DevvO, which is a bank. And so this is Paris Blockchain Week was actually a good kind of indication of this movement. Even a year back at Paris Blockchain Week, there were no banks there, and so this year there were lots of banks interested in the crypto space. And last year it was like, it's crypto versus banks. Now it's banks are interested in getting into crypto, right? So it's indicative of how the world is changing, right? And again, this big movement is moving forward with tokenization. That's banks getting into crypto is part of that too. It's becoming a serious kind of business, requirement. So I was having a conversation with Paul is the fellow's name at DevvO, who's in charge of kind of their digital asset side of their business. And he was describing to me that DeFi has so much innovation. It's such a compelling space. And this is a guy who's been eating, sleeping, and breathing it for years now. And he really knew. I was impressed with how much he knew about the crypto space, even though he was working at a bank. Like he knew everything that was going on and understood it. Really, really impressive fellow. And really nice fellow too. He has a great sense of humor, just fun to interact with. And so he said, DeFi is amazing, but as a bank, we can't use it. I can't put my assets into a smart contract that might get drained. There's no way I can take that level of risk. Even if we do our analysis, even if it's been audited, it's just a level of risk that banks can't take. You can't move your assets into a smart contract. And he said, I love what these big lending protocols are doing, for example, where they make pools of assets and they can borrow from it. And then, and then if you default on the loan, then the collateral goes back to the lender. He said, I love that. He said, I've got a lot of money that we could put into that, right now, but I can't commingle my funds with, somebody else's, funds that have anonymous users that could be doing, implementing terrorism or money laundering or things like that. Like regulators will never go for that. They'll never allow you to commingle funds. Like if you have a lending protocol that TradFi is going to use, everybody has to be KYC and has to be fully vetted and run professionally. And then there's a lot of tax issues too. Like if you in the European Union transfer your assets to a smart contract for a lending protocol, you take a 30% tax hit. So are you going to take a 30% hit on your assets to be able to, lend it out? No. And so there's these kind of real world problems that TradFi has that DeFi doesn't. And then I said, oh, well, we could solve that problem. We could spin up a shard around it. We have a innate lending protocol where it's not smart contract based. It's actually at the validator level, at the core kind of blockchain operating level. So people's assets that are collateral stay in their wallet. They get locked up until the loan is paid off, but it just stays there, so you don't get that tax hit. And then I started explaining to Paul the private key loss protections, and then the theft protections. And he's like, "Oh God, that's exactly what we need. Like we can't move ahead when you have those kinds of risks." So
Yeah.
across the board, all of the things that again, we're kind of used to in DeFi, all these problems that are just craziness, really, but we're kind of used to it. So you don't raise an eyebrow. For TradFi to get into it, you can't have those problems. And so we built the system where you start checking these boxes. You have private key loss protection, you have theft protection, you control your assets, you don't have these big tax hits, you maintain KYC across all the assets in a pool, right? All those are things that nobody else does, that our solution uniquely does, and can now allow TradFi to come in. So we gave a big talk at Paris Blockchain Week. Ray Quintana, the CEO of Dev Digital, was on stage, and then Paul came on. And the theme of the talk was bringing DeFi to TradFi, or in other words, combining the innovation of DeFi with the safety and security of TradFi. So that's the main kind of philosophy. And I could talk for another half hour about all the various things that we've added, all those various checkboxes. But when you go through each one, you talk to TradFi institutions, and they're like, "Well, we can't move ahead because of this." It's like, "Well, we got a solution for that." Or, "We can't move ahead because of this." Well, we could develop a solution for that. Now we've developed it. So we've got all the checkboxes checked now that TradFi can start getting into this innovation of DeFi.
Wow.
And they can set their own rules. So when you split up your own blockchain, obviously it's just using the back end, the engine room, but each bank can set up a specific parameters for each of those shards to interact in a certain way with certain parameters.
Yep.
Okay.
Yeah. So
Very,
when we use banks, you can almost think of like crypto is almost contradictory to what banks do, right? Crypto, you hold your keys, you hold your assets, you're in control of things. Again, that mantra, not your keys, not your crypto, right? And so the whole foundational philosophy of the crypto space is kind of contradictory to what banks do. And then banks, in contrast, are a place that we trust. You put your money there, you assume that when you come back the next day, it's still going to be there. If it's not, then there's recourse, right? Somebody's got to answer to it, and the government ultimately makes sure that banks follow the rules to make sure people's assets are protected, right? So two completely different philosophies. But one of the things that I've kind of realized over the past 6 months, as we've been talking with TradFi companies, is those concepts are not mutually exclusive. They're not contradictory. I think there's going to be a large segment of people that want the trust of banks and the responsibility of banks and governments to make sure things don't go wrong, but use the innovation of DeFi products, right? And so a lot of people don't want to get their own hard wallet. They don't want to maintain their private keys. They don't want to worry about the trade-offs between losing it or getting your private key stolen. That's stuff that grandma and grandpa don't care about. Grandma and grandpa have their money in the bank account, right? And so if you want to combine those concepts, the innovation inherent in DeFi, there's a lot of people that will want to put their money into banks and then let banks manage that. And banks can even manage private keys through security systems that are tried and tested and proven. And we provide the technology that lets those two worlds meld. At the same time that we're also providing the technology that lets other TradFi companies bring new assets onto the platform. So the all of that coming together, again, this is the future of where finance is going. And again, the crypto space is going to look dramatically different in a few years.
Yeah.
Absolutely.
And I think the crypto space will get there because, traditionally my dad used to collect these gold bars or these gold coins, Kruger rands, and store it somewhere, right? And then the problem is like, where do you store it? Where do you keep it safe? So it became that issue. And then banks are like, wait a minute, we don't actually have to physically give you a coin. They can actually do it on your behalf. So you log onto your account, you buy gold, and now when you need it, you just cash out your money. So there's no physical holding of the gold, but you can. But it's under their management, under their security and all of that. And obviously there's recourse, thank goodness. So I think crypto is just another leg up.
And take that a step further. So imagine banks are now providing these services, the same as you just described. But now they're able to put their assets into a lending protocol that's blue chip. Everybody accepts and understands it. It's got KYC across all the participants. Everything's automated. There's no risk to the lenders because you run through a legal definition held on the blockchain, all the rules around lending. So now bigger entities can come in and access it. So you'll end up having asset managers, and think of how big all the world's asset managers are, who have clients that say, I want to borrow off of my crypto. And so they provide that. And then you have banks that provide assets in and get a return off of the pool, which they can give to their customers, right? And so it's obvious where all this is going. Like soon as you open up, it's obvious that at this point, to me, it's crystal clear that TradFi is going to move into blockchain and DeFi in a big way. You gotta do things slightly differently, which is what we do, but it's going to happen. And then the money that's made in the space and all the innovation that we've shown over the past few years, where there's real demand for these kinds of things, it's a better way to implement financial transactions and financial products, is going to end up being something that customers of banks and asset managers can share in. So again, this is clearly where things are headed.
Tom, so it's an exciting space, and things are heating up, and the crypto landscape is changing, right? And I think people just think like old school Bitcoin token, crypto is a scam. But when you go into the technologies, and we're blessed to interview a lot of the CEOs, and we get to like learn about these different new ways of and you're like, your mind just gets blown out of the water. But the real question is, we always try to bring it back to what are the real tangible, when can people start seeing this? So what industries, what enterprises, or even governments are thinking about, DevvX? And can you just give us some of the partnerships that maybe could come about from your system?
Yeah. So I think one of the big categories is, as I was describing before, tokenization. So we're going to start seeing many more different types of assets, being carried and held, the ownership of those assets held on a blockchain. And so that'll create new dynamics for, again, financial products, right? So you'll be able to have trading and selling and marketplaces around real estate or stocks and bonds, or I mean, when as stocks and bonds, get moved onto the blockchain, and it's inevitable, that's going to create kind of a global disruption on how things operate. Things like the ESG space, carbon credits, that'll be a big category. I think other assets, even things around entertainment like music and movies and shows and stuff. Just everything is going to be digitally held soon. So again, it's a big movement. It's something that's kind of under the radar for most people, but you see these big financial companies moving ahead. One of the big categories that they're leading with, one of the big categories broadly that's being tokenized, is loans. Loans is kind of an early space, and it's a space that we're moving ahead in as well. And then with us specifically, we put together a relationship at the end of last year, so in December, with the world's largest supplier of exchange technologies. And so we're integrating our technology, our blockchain technology, into TradFi exchange technology for the first time. And it's going to be an amazing product. It'll be the first time that orders coming into the exchange will be guaranteed to settle. That's huge, right? Because that means that you don't have these long settlement times, and settlement ends up being very fast. And then once assets, or once the orders are matched, then they settle instantly. So it takes about a tenth of a second after orders are matched, and that's using the contingent transaction set invention that I described, where you have buy orders and sell orders that each have contingencies. You match them up so that their contingencies are collectively checked, and then they go into a set, and then they go through on the blockchain at the same moment. And the moment that they go through, all the assets have switched hands.
Sure.
And so that partnership, I think, is probably the biggest event that I've had at the company. I mean, that's huge. Taking the world's leading blockchain, or I'm sorry, exchange technology and integrating with blockchain. I mean, that's and again, when you remove middlemen and you have settlement that's instant, that's the future of all exchanges. We actually were talking to the head of innovation, at this company, and we're not able to announce it quite yet, but we're getting close. But I was talking to the head of innovation, and he said, if your Harry Potter magic does what you say it does, that's world changing, right? And this is somebody that interacts globally, across many different TradFi exchanges. So,
At that moment, did you do a little
yeah, right.
a
Elements
little
changes.
wand
Yeah,
exit?
right. Yeah. And so then the other kind of big push that we're moving forward to is what I was describing with the DeFi to TradFi type of concept, combining the innovation
Mhm.
of the decentralized finance world with the safety and security of the traditional finance world. And so we just announced our partnership with DevvX, and we're looking at creating DeFi products that are acceptable to TradFi customers. And then a lot of what we're doing with those DeFi products that TradFi will be able to use, those integrate very well with the exchange. So it's not two different efforts; it's one big effort that's very synergistic. So the pools that we call them liquidity caches. So the pools of assets or the liquidity caches that underlie the exchange, those can be used for lending. They can be used for market making on the exchange. They can be used for instantaneous transactions. And we integrate all of that with our two tokens that we've been developing over the years, the DevvE token and the FIAS token. So DevvE will be an
Mhm.
intermediary token that you can use to instantly convert stable coins, traditional cryptocurrencies, and real world assets. And then the FIAS token will be a token that you can use to exchange kind of digitally based efforts. So things like social media, um, video games, metaverse, types of things. And so the tokens are a key mechanic in this overall system that combines the liquidity provisioning, which is the stuff we're working with DevvX, and the exchange application that our contingent transaction stats really kind of creates a new way of having exchange. So that's kind of where we're headed ourselves on partnerships. And coming out of Paris Blockchain Week, we met with so many TradFi entities, so many more banks that were like, "This is amazing. This is exactly what we're looking for. Nobody else has it." And then there were other partnerships that we had meetings at Paris Blockchain Week that we were moving them along. Ray had some really great dinners with some groups that are big in the crypto space that we've been talking to for a while, and they're ready to move ahead as well. So just partnership wise, we've got something that everybody needs right now, and we're seeing a lot of these partnerships coming together.
Oh, that's amazing. Sounds like you are expanding very, very quickly. So really nice to hear. So you mentioned DevvE and FIAS briefly there. Can you delve into those a little bit more for us? Give us a little more detail and kind of, exactly why someone would hold DevvE or FIAS, kind of what the differences are there.
Yeah. So I'm really excited about what we've been doing with DevvE and FIAS. We've described we just recently over the past week and a half put out information on kind of the utility of DevvE and FIAS and what they're going to be doing
Mhm.
with the exchange, what they're going to be doing with the liquidity caches. So we just announced that information. We're just starting a KOL program where people can go to our onboarding page. So it's devexchange.com, DEVV. EXCHANGE, so DEVV exchange.com. And you could go and you can get a referral link and let other people, know about our platform and what we're doing. And then any referrals that you bring in, you can share in the upside of any fees that come from those, and you can share from their referrals as well, and then their referrals. So it's kind of a three level system. And so we just announced what we're doing with DevvE and FIAS. At the same time, we put out this onboarding platform and the referral system. And so I feel that DevvE and FIAS have more utility than any other token out there. They can be used to integrate with the exchange transactions, the instant payment transactions, the lending protocol. And they drive all of these systems. So fees will be paid with DevvE on the exchange. If you don't happen to have any DevvE, then it automatically gets exchanged. So it'll be easy to use, but it also there will be an incentive to hold DevvE because it again kind of powers these transactions. And then you can create pools of DevvE and FIAS that can be lent out and then you can borrow off of those assets even when they're in those pools, so you can get access to kind of the underlying value, and the rates of borrowing might be less than the rates of using it. So in general, the integration of the tokens and how they just make the whole system work, is really compelling.
Real utility. we
Right.
haven't
Yeah,
seen we haven't seen much of that in the crypto space. Everyone always says utility, but
yeah,
then
it's
when it
real
comes down
utility.
to the
So
push, it's
a good example of that is you don't just stake DevvE and then get something out of it, right? So people kind of play the crypto game where you stake an asset and then they contrive something that creates
mm,
value. And what they're really doing is they're just trying to limit the circulating supply, you know, playing with price and demand curves,
Right.
supply and demand curves, and again, it's all just contrived. It's not like
mm,
real utility. There's very few situations where there's actual real utility for a token. ETH is one of the exceptions. Like ETH is a really powerful design because it's built on powering smart contracts. So it's a clever implementation, but runs into its own problems because having the type of governance they have makes it slow and expensive and stuff. So in our case, you don't stake DevvE, you contribute it into the liquidity pools and then the liquidity caches, and then the liquidity caches are used for things like market making and lending and instant payments. And so again, it's real utility. And so when you contribute to those assets, and then now your assets are being used in these powerful ways, including with TradFi as they start coming into the space and more money comes into it, then the value of DevvE really is just compelling in its utility in those use cases. So yeah, it's real utility. It's not just these contrived things that's kind of ubiquitous across the whole crypto space.
Right. Very refreshing.
yeah. So, Tom, let's go back to tokenization. All right. We keep hearing about, real world assets, whether it be like real estate, stock, art, you name it, allowing perhaps maybe fractional ownership to be traded a lot easier. How's DevvE approaching this tokenization? And, how is it going to change the landscape of how, let's say, real estate companies, operate? Just
Yeah.
for example.
Yeah, so separate from what we're doing ourselves, again, just to kind of set the stage,
Hmm.
everything is getting tokenized. And there's a part of me that kind of thinks like, why hasn't this happened already? Right. Think of how much like we walk around with, these, supercomputers in our pockets, right, compared to, 40 years ago. And so everybody's got mobile phones, everything's digital. We interact on social media. Like
Hmm.
most of us sit there and check our phones all day, right? So in this kind of digital centric world, why have assets generally not been made to be tokenized? Why are stocks settled after a day? Why are our car titles still so hard to implement? Why has land got these really difficult searches to make sure there's all the rights around when you buy property, things like that. So again, this is inevitable. A little surprising that it hasn't happened already, but I think part of the reason it hasn't happened already is the technological infrastructure wasn't there, and that's what blockchain brings. So blockchain brings a really strong way to manage asset ownership. So blockchain as a technology, is really good at maintaining asset ownership and maintaining transparency and auditability, whereas a traditional SQL database doesn't do those things. So now that we have blockchain, now that we have technological infrastructure that can be used to track assets, now everything's tipping, and all of the world's big financial companies are moving things over into the blockchain space. Okay, so how do we fit into that? Well, one, we have a really powerful solution that uses a RESTful API, so just ways that traditional web programmers, any programmer in the world right now, can instantly kind of integrate with our system. So if you start going to these big companies that have big tokenization products or projects, whatever they're tokenizing, whether it's land or stocks and bonds or car titles or whatever, right? Art, music,
Mm,
anything. We
Mhm.
provide a way to very easily get those assets onto our platform. We provide a way for then people to instantly transfer those assets to and from any other asset, using DevvE and FIAS as intermediaries. And then we also provide the safety and security that you need for the traditional finance world to be able to interact with those types of assets in this way, with fraud protections and loss protection. So we're starting to create this entire ecosystem where you can start to have all of these assets on chain in a digital format and use them in a way that you have to check all the boxes to be able to move ahead on it. And then one of
Mhm.
the ramifications from that, one of the things that really comes from putting these pieces together, then is I think it's going to become more and more our lives run through these online representations of assets. Right now, if I want to buy a house with Bitcoin, let's say you bought Bitcoin a while ago and it's gone up in value, and now you want to buy a house,
Mm.
you have to sell your Bitcoin for US dollars on exchange, link in your bank account, transfer your assets to to your transfer the money to your bank account, and then go through the traditional house, buying process. When everything's all integrated on chain, you could just pay for fractionalized real estate as an investment, or pay for real estate, for your house, just on chain using the assets that you have, whatever that is. And similarly, you might invest into fractionalized real estate, like a big, housing development or something, where you invest into a portion of it. Investments in general are all going to be moving on chain as well. And it all needs to be regulated. It'll take time, but again, it's where things are headed. But you can imagine buying into a fractionalized real estate, project as part of your investment portfolio, and then go to Starbucks and buy a cup of coffee with a tick off of that, even, right? And our technology and products allow that. We can exchange any type of asset value for any other type of asset value instantly. And so we have I described the liquidity caches. So you'll have, for example, a Bitcoin DevvE liquidity cache, and then you would have a US dollar DevvE liquidity cache. So if you go into Starbucks and you want to buy a cup of coffee, swipe a credit card that's hooked up on the back end, or scan a QR code, and that'll send a transaction where you transfer your Bitcoin into the DevvE Bitcoin liquidity cache. That outputs DevvE that goes into the DevvE US dollar liquidity cache, which outputs US dollars that get sent to the retailer. And then those three
Okay.
transactions all get put into one contingent transaction set, and they all go through if and only if they all go through.
Hmm.
And so there's no risk that it kind of get lost in the middle. And so you end up in a situation again where you could transfer instantly any asset into any other asset, for payments, right? It was huge, powerful concept. And then people that contributed DevvE and contributed Bitcoin and contributed US dollars take a share of the fees that we get off of that. So we've built the entire system that lets all of these interactions happen.
Wow, that's absolutely amazing. And it happens very quickly.
Yep.
So with
Less
your
than a tenth
8
of a
million
second.
transactions per second, that's crazy.
Yep.
So what are the fees like though? So all those transactions have to, as you just said, generate a fee. What kind of fees are people looking at to do something like, to make that transaction?
Yeah, so the fees will be less than fees that we're used to right now, right? Because you
Okay.
remove middlemen, you remove so much of the kind of inefficiencies in all of the systems that are out there right now. So when you add it all together, it'll be pretty substantial fees that those that contribute to the liquidity caches can share in. But any given fee from a user's point of view is going to be minimal. Like, it's going to be less than what we're used to paying in fees right now.
Wow, that's amazing. So speaking of all those, personal type transactions, we were talking about security on maybe a more, enterprise level, but security for personal use in crypto is, absolutely huge. It's super scary for newbies to come into crypto because of all the hacks and scams, and we were talking about the headlines with exchanges being hacked for billions of dollars, and also people losing their life savings, because they clicked on a bad link, which
Yeah.
brings us to your product, DevvProtect. And that's, what I've heard is that it protects against fraud, theft, and loss. as a user of crypto, that sounds pretty much too good to be true. So,
Right.
it's kind of like an undo button for crypto mistakes.
Yeah.
So can you tell us, how does DevvProtect work, and how does it keep user assets safe without sacrificing decentralization?
Totally.
Mm.
Yep. So this again, when I first got into crypto 10 years ago and I started looking at the space and you just see all the craziness. Oh, another $100 million was stolen. It happens. I was looking at that, I was like, this is crazy. Like you can't build real world systems that mainstream is going to move into like this,
Mm.
right? And so designed from the very beginning, from the foundation up, this philosophy that you can't have loss of a private key where you lose everything and there's no recourse. You can't have situation where all these hackers come in and steal your assets, quickly throw them into tumblers, spin it all out, and it takes years for the FBI to track everything down. When it's a big theft, and as a personal kind of individual, it's never you're never going to get your money back,
Yeah.
right? That kind of
Well,
thing.
yeah.
And so we designed from the beginning this philosophy of theft protection and loss protection and fraud protection. Okay, so each one of those three is its own separate logic problem. It's actually kind of a fun logic problem when you're going through and designing it. So let's start with the loss protection, right? Again, there's that infamous case where the fellow had private key on a hard drive. It got sent to the dump. He couldn't find it in the dump, and then he battled with them for years trying to. So there's 100. What is it? I don't remember. It's billions of dollars of
Yeah.
Bitcoin
Yeah.
held
Yeah.
in the dump, right? And so, which is crazy, you know. So
Right.
so the way our private key loss protection works is you can set up ahead of time that you have a definition that if you lose your private key, then you can have the assets transferred to a new wallet. And so let's say, I mean, this is important for inheritance too, right? If somebody
Hmm.
dies and their relatives don't know where they put the private key,
Yeah.
sucks if you lose all of
Right.
the investment in crypto, right? Or just in general, if you lose your private key. Actually, this happened a lot in the recent fires in California. Entire
Hmm.
neighborhoods were burnt down. And there were a lot of lost crypto in private keys
Oh
that
shit.
you
Wow.
think things are safe, but if your entire neighborhood burns down, like you could lose your private key in ways that you weren't expecting, right? So
Yeah.
so what you do then is you have other wallets that can sign the transaction and transfer the assets to a new wallet, right? So there's recourse. So on one end of it, that's straightforward, right? You set up ahead of time. These are the definitions of how things can be transferred. And if you lose your private key in a fire or a death or just lost it, then things get transferred. Now, then you asked an important part of the question though. How do you do that without giving up kind of the DeFi mentality, the decentralized,
Right.
philosophy? So in other words, what keeps people from abusing that loss mechanism? Well, here's the clever part. If you transfer assets through this loss mechanism, loss recovery system,
Hmm.
if you didn't actually lose your private key, then you can sign a transaction that reverses it back and puts it back into the state that it was at. And so when assets are put, through the loss recovery into a new wallet, they're held there for 30 days. And we're going to have a bunch of different, like you'll get text, you'll get emails, you'll get calls, whatever you set up. You can make sure you'll find out over those 30 days. And almost all hacks, like 99% of them, are just a very quick thing. People know about it, and
Hmm.
they wake up the next morning and everything's gone, right? So as long as you know
Yeah.
about it, you can reverse any abuse of it. So if things get transferred over and you didn't lose your private key, by definition, then you can use your private key to transfer everything back, and you didn't lose it. Nobody abused that process. So it's a pretty simple concept. There's recourse if there's loss, but if you didn't actually lose it, then it can't be used. And so it's a pretty simple system. A little bit like, why didn't anybody else think of this, right? And we submitted patents on this 8 years ago. It's a very simple concept, and it solves that problem. You just set up ahead of time that if you lose your assets, they get transferred over. If you didn't lose your assets, you transfer it back. Therefore, there's no actual trust in the system, and you solve that problem for blockchain, right? And we have patents on it and an implementation. The other thing is you can't do this unless you do it kind of at the consensus level. You can't do this with a smart
Hmm.
contract. And so you have to have, your access to the design and development of the layer one validators themselves. There's not very many entities that have that, right?
Hmm.
And,
Yeah.
and most blockchains they can't go back and redesign this in because it wasn't designed from the beginning. So again, 8 years ago we designed this from the beginning for the validators, and so not only are we the only ones that can do this, but it'll be years before anybody else. Once they kind of see how we're doing it, it'll be years before anybody else technologically can do it. It's not something that Ethereum or Solana or any of these other layer ones can do quickly. So very
Yeah.
powerful concept. And we've got this going at the point where all of the world's TradFi is coming in, and TradFi especially doesn't want to put that level of risk on. So like the partnership with
Yeah.
Delubach, they loved our private key loss protection.
Right.
Um,
That's
the
really interesting.
yeah,
How do you achieve it though? So like so let's say this happened to me, right? And I goofed, I lost my private key. Who do I initiate contact with? How do I get my,
you have to
how do
you
I
have to
tell
set it
you
up
that I
ahead of
lost my
time.
private key?
Yeah,
Okay.
so you have to set up ahead of time. So you
Okay.
define what the recourse is, how the loss protections work. So what typically
Okay.
happens is you define other wallets that can sign the transaction, the loss recovery
Okay.
transaction. So
Gotcha.
you define that, and if you don't define it, then it's the same as any other blockchain, right? Then
Gotcha.
you're SOL if you lose your private key. But like we'll make it where it's the standard that everybody defines it, because again,
Right.
you don't lose anything. There's no trust in the system. So everybody should have this. Everybody should have this in every blockchain, right? Now that you think of how it works, it's like everybody should do this, right? So we'll make it where everybody through kind of the onboarding process, into the system. How do you want your recovery protections? And keep in mind, and then there'll be some crypto purists that will say like, I've got my system down. I've got it etched into a steel plate that's at the bottom of the lake, across the country, and I'm the only one that knows how to get it. And I don't need your stinking help, right? That kind of
Right.
thing, right? So there's those guys, right? And they could just not use it. And even those guys, even the crypto purists, they can use our system, not enable the loss protection, and completely take care of it with their steel plate at the bottom of a lake, and they're set. But the most people, are going to want this simple thing you sign up for, and it protects from death and loss and all these things. So another of the and again, we designed this in 8 or 9 years ago. Another of these clever kind of logic problems is theft protection. And so when you are holding your crypto assets, there's a bit of your assets that you transact with often, right?
Right.
But most of what people transact with, like if you buy some Bitcoin and you buy ETH, you hold on to it for a while, hope it goes up, maybe get to a point where you want to buy a
Hmm.
car or sell something, right? You're holding it longer term. So what you can do, same thing, you have to set it up ahead of time, but you set up your theft protection and you say these assets are locked in the theft protection. And so then if somebody comes in and steals it, then they transfer it out. Well, the transfer out, because they have the protection wrapped around it, doesn't happen for a time period. So let's say 30 days. Okay. And so again, you get these warnings. Somebody broke into your account. They tried to steal your assets. All right. Well, I I didn't allow that to happen. Somebody hacked my account, and you cancel the transaction, right? Okay, so
Wow.
same as the other problem. Then there's another side of it that begs the question, right?
Hmm.
So with the loss protection, how do you keep people from abusing it? With this, it's like, well, what happens if you need to use the assets in a shorter time frame? What if an emergency comes up, right? My water heater went out, and I need to
Hmm.
sell a little bit of my Bitcoin. Well, what you could do then is you could take a loan on the system, on your assets, and all this works innately in our system, right? And then you can get access to your assets right away for an emergency. And a lender can lend one-to-one the asset. So let's say you have a Bitcoin and you need to sell a little bit of your Bitcoin for your water heater went out, right? So
Hmm.
your Bitcoin's locked up, can't be moved for 30 days. But something came up, I need to do it. So you get a loan on the Bitcoin, and you get a loan just a part of it, right? So you get a loan on a tenth of your Bitcoin. Um,
Hmm.
that tenth gets locked up in your system with the lending protocol. It's one to one. There's no risk for the lender. It's just a timing issue for the lender. So it's a very inexpensive loan. It's almost for a fee, you know, like a small fee. You get access to
Mm.
it right away where you need access earlier than you were intending, than you were planning. And then you sell your Bitcoin and pay for your new water heater, right? And there's no risk to the lender because if you default on paying it back, then it goes to them. And that what the lender gets in the collateral still has the lockup, but that's fine because the lender has no risk on it. Again, it's just timing. And timing is
Right.
something that banks and other lenders can manage. And so you have a system where there's protection from theft, but you still have access to the assets if you need. And it works, right? Imagine if the North Koreans stole, the 1.5 billion, and then they're like, well, it's not coming out for 30 days. Let's go and try to get a loan on it. Like, so the,
Right.
the original owner, like they can prove who they are, and they can
Right.
get access to the assets. And again, it's a very small fee because there's no risk in the system, right? So the ways that hackers and thieves work just wouldn't work in this system. But from the user's point of view, you have everything you need. Your stuff can't get stolen. And if you need access to it quickly, just pay a small fee and get access to it. And it's a small fee; it's not a big deal, right? So again, it's a
Right.
clever solution, a clever way to implement theft protections. And for the majority of people, it solves everything that they need, right? And then same thing, if you're a crypto purist, I've got my system down. Nobody's ever going to be able to steal from me. Fine, don't set that up, right? But for the majority
Yeah.
of us, it's just a nice way to hold your assets. And then the
Right.
last one is the fraud protection. You can put kind of a lock on a particular transaction that goes out, and two people can agree to that ahead of time. So, like if you buy something online, um, assets don't transfer until the item arrives. And then what happens if there's a dispute? Well, that's what Visa is, right? Visa has a dispute resolution system. And so
Hmm.
Mm.
another one is when you send stuff in crypto, it's very nerve wracking, right? And you send stuff
Right.
and it's like, I didn't get it. Just put a 10-minute, DevvProtect on it, on the transfer itself. I didn't get it. Oh crap! I sent it to the wrong address. Oh, okay. Undo that and resend it back, right? And so it's like you could think, well, how is this going to work with dispute resolution and stuff? That's not the point. The point is we create the tools that businesses use to be able to
Yeah.
implement their businesses, right? So vendors or a place like Amazon or even a company like Visa, they could use our tools to implement their standard solutions, and they have a very robust dispute resolution system. They can use our technology and our implementation to build their business, and lots of entities will do that. So a lot of the specifics will be driven by whoever's kind of building their business and what they build. But we've created the tools that everybody needs to operate the way that we're all used to operating in the regular world.
Wow, that's absolutely amazing. Definitely bringing the real world into blockchain, which is
Yeah,
Yeah.
crazy.
we're
Something
gonna
I
No,
thought
we're
was
gonna be
way off in
like
the future.
yeah,
So
we're going to be looking back. I mean, like the three of us now, right? We've been in the crypto space. We know the pain that you have, the nerve
yeah.
wracking nature of sending crypto transactions and stuff. Like we're going to look back in 5 years and going to be like, man, remember the days when you were worried about losing everything, and all these hackers were always constantly trying to get stuff and everything. It's just going to be a much safer system. And like you can't eliminate crime and you can't eliminate you know all these problems entirely, but you can move them into a realm where somebody who's careful, who protects their stuff, um, you know, has recourse, when there's
Yeah.
problems. Like Bybit, the
yeah.
Bybit hack was very clever. The guys that were moving the assets, they didn't do anything wrong. They were using a third party multi-sig system that the hackers hacked into, and it looked the same to them, and they did everything right, from their point of view, except they had all their money in an omnibus while it was stupid. But
Right.
that aside, like there's nothing anybody could have done. Like I got SIM card swapped a while back, and somebody internally at AT&T, in the middle of the night, swapped my phone. There was nothing I could
Wow.
have done, to prevent that. And so in the middle of the night, and they didn't get anything. Like I don't keep stuff on Google, but I've
Hmm.
spoken to people who have that, in their Gmail account have their private keys and lost all their assets, that kind of thing. So we get rid of all of that, right? Because if somebody hacks in and you're maybe not as savvy as somebody else on how you manage your private keys, and it gets stolen through these really clever criminals that do things that you never would think of, like hijack the entire system that where you do your multi-sig, right? Then there's a whole level of protection below that even if your private key did get stolen, there's recourse, right? So that's huge for all of us.
Absolutely. Wow.
Yeah, there's just like my brain's running wild because now that you just mentioned it, imagine tokenizing your phone number, right? That this is mine. I can prove that it's mine, and then a SIM swap is a thing of the past.
Yeah,
It's
yeah,
incredible.
identity as well. So
Yeah.
identity is held because identity theft's a big thing, right? So if your identity and the way that you prove yourself is held in your wallet, like you go into a drugstore to buy alcohol, and you have to show
Hmm.
you're over 21. You'd be able to prove you're over 21 without giving them your home address. Like you show them your wallet, your ID right now, and you're showing them your address, your home address. Like
Hmm.
that's not good, you know.
Yeah.
But in this way, you would just be able to prove that you're over 21. But then you have all the protections around identity theft as well, because your identity is controlled by these assets. And so the
Mm.
protections that I'm describing around other assets, protect identity as well. One other thing that's neat is I had a guy that I was talking to. He's like, this is even better than TradFi. Like he's like, I was helping my uncle, and my uncle got hit by a scammer, and he got talked into my elderly uncle, right? So he was taking
Hmm.
advantage of an elderly person. The scammer was, and he transferred all of his assets out of the bank, and the guy was like, man, like I wouldn't have fallen for it, but my uncle did, and we're helping
Hmm.
him. But if I could set up, these DevvProtect features, if I could have set up for him everything, then when that money was stolen, um, we could have prevented it. We could have taken our destiny to our own hands with these types of controls. And he said, instead, now I'm fighting and arguing with the bank, and it doesn't look like they're going to help us. It looks like, from their point of view, sucks. You lost your money, but you lost your money. So this is
Wow.
even what we're doing is we're giving people control over their assets in the way that they want to, and it is even better than TradFi in a lot of ways.
Yeah.
Wow.
Well, one last little story before we move forward is that I often watch this I think a scammer payback, and often they would like these scam callers would phone Americans particularly, and these old grannies would just give their money. Now, if there was somehow a system where you can delay that transaction, that yes, they sent the money, but there's a recourse. Yeah, just saying,
Yeah,
scammer
totally.
payback. Are you
You
listening
delay
to
it,
this?
and you set up ahead of time, and it's like, Mom, that's a scammer. So
Right.
I
Yeah.
I actually had a call with my mom the other day, and she called me, and she was so upset because the mean people at Microsoft were trying to get her to give her
Oh
the credit
shit.
card. And so what happened is a virus got on her computer, started bringing up porn, right? And she's like, "Oh my gosh, what's going on?" And it says, "Call Microsoft to remove this," right? And so it's not Microsoft, of course, right? And so
Right.
so she called them, and she's like, "I want you to get this off my system." He's like, "Well, I can't help you until you give me your credit card." She's like, "I'm not giving you my credit card number," and hung up on him. So then good, it was that, but she actually thought it was Microsoft. So then she called me, and
Mhm.
she was fuming, and she was like, "I'm so upset. That jerk at Microsoft was such a jerk." Like I think I was like, "Mom, he's not for Microsoft." That was a scammer. And
Uh,
you and thank
us,
God you didn't. Thank God you didn't give your
yeah.
credit card, right? So I
Right.
could go and I could help her get everything set up. Where then she calls and says, like, I gave my information to Microsoft. I was like, Mom, that wasn't Microsoft. All right, let's check. They just tried to transfer all your money out. It's dev protected. We'll just reverse it. Don't do that again. Don't give them your information. Right. So again, yeah, you just set it all up ahead of
Yeah.
time where you're protected. And that one to me, kind of like I could see where somebody that's not technologically sophisticated runs into a problem, but the Bybit hack are the most sophisticated of people, that fell for something. And so, there's scammers that take
Mm-hmm.
advantage of people that aren't tech savvy, but there's scammers that also are very, very good. And these types of protections protect across the whole spectrum. So
I see how they targeted moms, because us dads were like, "Ooh, what is this?"
yeah, right.
There's no need to take this off.
Yeah.
Oh
Yeah,
man.
right. Yeah. Yeah, it's a feature, not a bug. Right. Yeah.
Yeah. So one last, because this is probing, because it's like it's part of our lives, and we joke about it. But just this last week, one of our dear friends in the crypto space, his MetaMask account was hacked for 200K, and
It's
I'm like,
crazy. Yeah.
I just want to just throw up. And then my other mate a little while ago, also he did there's a bug in the Solana system, right, whereby he clicked a site to transfer. He clicked it, but then it took over his entire wallet. And then what they do is that, like, you panic because now you send some funds, and then you quickly sell panic, but you're actually sending it to another fund. So
Yeah.
he still got his assets, but they've taken over his entire wallet. So his whole life's portfolio is basically in the hands of, if he moves any transactions or does any transactions, it goes straight to their wallet.
Yeah.
So,
It's horrible.
is this
Yeah.
something? Is this something that your product can, so for instance, he clicked on a bad site. All right, let's say Granny clicked on a bad site and changed the script. Is there a way to get out of that before any other nonsense happens?
Yeah. Yeah. You just use your loss protection, right? You can't use your private
Okay.
key anymore. That's the same as it's lost. You just
Mm-hmm.
transfer everything over to a new wallet. So there's no transaction that the hacker would be able
Absolute,
to get. Yeah.
absolute game changer.
It's
Wow.
Yeah,
a
for
total game
sure. That's
changer. Yeah.
great.
Yeah. And people in the crypto space deal with all these, these shenanigans, right? And we're all
Mm,
used to it. And, you know, no matter how savvy or sophisticated you are, then there's new things coming out, and the things you
yeah.
do, they make it look just like what you're doing. Like it's, the criminals are very sophisticated, right? And so
Yeah.
what we do is we put a protection level that's below all that, that no matter what happens up here with the private keys, you're still protected in the way you define below that. And the hackers can't
Yeah.
get to that, you know.
Wow, that's all really amazing stuff, Tom. Now, why don't we transition a little bit into another side of the whole DevvE and DevvX experience, and that's Nysperience. What's happening in that world these days, and what are the plans for it moving forward?
Yeah. So the Litcraft game, is kind of a fun ecosystem that we've been building. And so it's more than just a game. It's really a digital financial ecosystem, and it's expanding and growing more into even kind of a social application, social media type of site and usage. And so we just recently released Lit Legion, where people can come in and do tasks, and then as they do tasks, they get rewards. And so
Mm,
so it's kind of like I almost think of it as a real world MMO, right? In an MMO,
mm,
massively multiplayer online game, you run up to an
mm.
NPC, just a guy standing there, and he says, "Go kill 20 of these items and bring, 20 of these creatures and bring back their skins," right? And you do that, he's like, "Great job! Now go talk to this NPC," right? So we've got kind of a real world version of that where you still have it's still kind of built with NPCs, but you go and you do a task, and then when you do the task, you come back and you say it's completed. You get a reward, and then you get experience points, and you could kind of build your way up in the ecosystem, or in the whole just community, I'll say. And so
Mm.
so we just released that. It's kind of in the very beginning stages, but it's going to become, I think, a really compelling new thing. So we've got all of the games that you can play, where you can play games and earn. We've got the businesses that you could take all the assets from the games and then combine them into businesses and generate virtual revenue inside the businesses. So it's not real world revenue. It's kind of
Mhm.
digital, game revenue. But then we're going to expand that now into integrations with guilds, where the guilds tie in with Dev Exchange and Devise, which is the liquidity cash system. And then work and efforts that you do in this whole digital financial ecosystem increase the amount that you earn through real revenue on Devise and Dev Exchange, through guilds. and then we've got the task system, which is Lit Legion. So all these kind of big pieces are coming together, and it's going to be a really compelling community environment. I think it's going to be really fun for people to interact with each other. It'll be fun experiences, but also it'll let you kind of do the things that you want to do. So if you're great on social media, you're great at finding leads, you can onboard a bunch of people with your referral code. They all come in, and then ultimately that can lead to actual revenue shares with Dev Exchange and Devise. If you like playing games, you can just play games and not worry about the rest of it. If you like building businesses, you could just take the efforts of everybody else, build your businesses, and funnel kind of the assets and rewards into the guilds, which give you a higher share of the real world revenue. And so it's going to be a system where whatever is kind of your thing, whatever it is you like to do, you'll be able to kind of find your place in this overall digital financial
Mm.
ecosystem, ultimately leading to kind of real world revenue generation.
What type of what's the number of players that you have on lit pets at the moment, as well as like what is your strategy for growing? Because obviously we've been through a bit of a rough, bear market per se. So obviously the engagement in crypto hasn't been so great. So we understand that. But now as we're starting to ramp up and things are getting slightly better, well, soon to be slightly better, how are you planning to bring that mass audience into this world?
Yeah, so we've got tens of thousands of players already. Which is small in the scheme of kind of the gaming industry, but we've also got it's been a lot of work kind of getting to this point now where all the tools are in place really to start growing in a more substantial way.
Okay.
And so a big part of what we're doing is the referral system and getting others to lead others to come in. And if you kind of look at it at the top view, the 20,000 foot view, and you look at everything that we're doing, we're building an exchange where everybody can manage their own assets through the entire time that they implement the exchanges. There's no omnibus wallets, and you have the theft protections and the loss protections, fraud protections, all the things that make it safe. So to me, it's going to be clearly the place to trade your assets. There's not anywhere safer in the whole crypto space. And safety is a huge problem. And then we've got these liquidity caches that you can use for lending and market making and instant payment transactions. And the liquidity caches are going to be placed where people can contribute their assets and make upside on it. And then more, so it's going to be a great way to grow liquidity. And then liquidity begets more transactions on the exchange, which begets more need for more liquidity, and the whole thing can snowball. And then on the Litcraft side and the Lit Legion side, then we've got all of the community pieces where people can effectively integrate or effectively invite others in, and then we can organize community efforts and say you get more rewards if you do this. So it's a way to just organize all the ecosystem, everybody that's involved in it, give them, it's an effective way to kind of just organize what we're doing. And those three kind of big pieces together are really powerful. Just the whole is more than the sum of the parts.
Back a couple years ago, we were all buying land and eggs, pets in the lit pets. How does that still integrate with Nysperience?
Yeah, so within that bigger context that I was just describing, then the game itself is still there. So we've been continually
Okay.
expanding the use of the in-game assets. So lit pets and then Nysperience land. So actually, just at Paris Blockchain Week, we had these big releases go out. So we just released Lit Land, which is a 3D RPG that you can go in. And then there's and again, all of this, all the game stuff from the beginning was built around kind of the digital financial ecosystem, the DFE. Like
Right.
our servers internally are called DFE servers, right? So that's how it's been from the beginning. And so in the 3D world in Litland, you can go to a particular city, which is the economic hub. So it's kind of our New York of the world, and it's called Litu. And so
Okay.
you can actually use your land right now and buy a business in Litu. And then anybody that transacts with the components, the items in that business. You have to pick what you buy and sell, or whether you're a warehouse for items or whatever. So there's different kind of businesses around different items. But whatever item you're interacting with the business, then you get a share of all the transactions that happen. So you can use your land to buy these Lit2 businesses, and then there's the regular Nysperience businesses as well, which is a different type of business that you can build up. So the entire kind of gaming landscape is becoming bigger and bigger. I mean, it's huge, and it's almost to a point now where it's a little bit too hard to understand everything when you first come into it. So what we're doing now, we had a big push to get V6, is what it is. The version 6 of the overall digital financial ecosystem. We had that coming out just a week ago. So I'm decompressing myself whenever you have these big launches. It's just so much work and working through the night and the weekends and everything.
Right.
So I'm finally decompressing from that a bit. And then everything marketing wise going for Paris Blockchain Week was a lot of work too. So it's a huge amount of week. You're catching us right at the okay, got everything out. But now that we've got the Lit Legion, which is that task system, and then we've got all these other kind of bigger components, and then again the guilds and how that's going to tie in with the exchange and the and devise the liquidity cash system. It's kind of complicated, right? Even just summarizing everything, there's a lot of pieces. So we're now doing an overhaul of the system where you come in and you just say, like, what is it I'm interested in? Do I want to play 2D casual games? Do I want to play these 3D RPG role-playing games? Do I want to just earn? Do I want to interact with the community? Do I want to build a career across various pieces? So you come in and it immediately kind of takes you and say, what is it you're interested in? And then we use the task system itself to guide you through it. So it's like, I want to earn. You come in and one of the first options you get is I want to earn. All right, well, it's going to start taking you through tasks one by one in a straightforward way and say, if you want to earn, you might want to build a business. Here's the steps to build a business. You might want to get a Lit2 business. Here's the steps to do that. You may want to, find the highest revenue generating in terms of heptals, the in-game currency item, and then build those and then sell them on the marketplace. The one thing is the whole digital financial ecosystem has hundreds of liquidity pools, like you would have in a DEX. So that's all built in already. So the whole thing is a pretty complicated. The foundation is very complex, but the goal now is to get to a point where it's easy for someone to come in, quickly learn what they want to do, and then be effective in it. So that's overall kind of where we are.
Very cool. That'll help a lot. I'm going to jump back in and take that little tutorial, I think.
Yeah,
So
totally.
That sounds great.
Tom, it's always refreshing chatting to you and see what you've created over the years. It's been a number of years and it's coming to fruition in multiple ways. And it's just so exciting to listen and to hear what's happening. Thank you very much for sharing your insight with us. We really appreciate it. And we definitely want you back on the show when you guys launch and, get everything out and you can release those nuggets of information that's hovering at the moment. But thank you very much for your time.
Yeah, awesome. It was great seeing you guys again. Great being on the show. And again, great seeing your growth as well. So good stuff.
Thanks a lot, Tom. Great having
Awesome.
you.
Thanks,
Talk
guys.
soon.
Bye.
Take
See you
care.
guys.
Ciao.
Bye. The material and information presented in this recording are for entertainment purposes only. Do not misconstrue what you hear as investment or trading advice. Always do your own research. The views, thoughts, and opinions expressed by the guests on this recording are their own and do not necessarily reflect those of Dad's Gone Crypto or its hosts.